the Market Musings podcast with Fairbairn and Russell. Hello and welcome to the Market Musings podcast, where today our guest joins us from two companies. He is the non-executive chairman at Emmerson plc and Trident Royalties, and it's James Kelly. So James, welcome to the podcast. How are you?
I'm very well, thank you. Thanks for having me on, guys.
Yeah, it's good to talk to you, James. We've not spoken to you before. We have spoken to Adam at Trident, and we've also spoken to Graham at Emerson on the podcast and interviewed them both as well. But yeah, it's nice to have you on as well. And Kenny, of course, is joining us. Are you doing okay, Kenny?
Yep, doing well up in Scotland. James, how you doing?
Yeah, no, I'm great. Nice to meet you too, Kenny.
Yep. And where are you from? Or where are you based just now, James?
So, well, I'm born and raised in London, but actually I live down in the West Country now, just outside Exeter.
All right, lovely part of the world. Yeah, my son's he's in Plymouth at the moment with the Navy, so yeah, it's not far away, is it?
Yeah, no, that's not far at all. It's about 40 minutes from here.
Yeah,
good spot down.
Yeah, it's nice, cool. All right, no, it's great to have you on, James, and what we like to do in these podcasts is, as well as talk about, we're going to talk about Trident and we're going to talk about Emerson. We like to hear people's backstory, because we're great believers that you can have the best projects in the world, but if you don't have the right people behind these projects, they'll simply fail. So our ethos is, people invest in people. So what we're going to do probably for the first 10, 15, or maybe even 20 minutes, it depends how good your story is, James, is for you to go back as far as you want, where you were brought up, early education, maybe went to university, what your first career break was, and then basically your journey to Emerson and Trident. And again, it's up to you how much detail you want to go into. It's really, the show is yours for the next 10 minutes. So Great. Over to you.
Great. Well, thank you. Well, I won't go all the way back into the depths of time, but as I said, I'm born and raised in the UK in the southeast. A pretty normal, relatively fortunate upbringing. Went to university in London, studied geography, or colouring, probably as it's better known, really. And then after university, I suppose if you think about things that sort of have a big influence on you, rather than leaping straight into the world of work, I decided to travel through Africa. So I was actually part of a group that drove London to Cape Town. This is back 99, so a long time ago now. We sort of drove all the way through West Africa, camped everywhere, and quite a defining period, really. So we went with a bunch of people who I didn't know, and spending that much time in close proximity with people means you get to know yourself and other individuals pretty well. But more importantly, sort of open my eyes to the broader world that's out there, and different countries and experiences, and how fortunate we are in living in the UK. And I say went all the way through West Africa, so actually Morocco, Mauritania, all the way down through to Central Africa, where we sort of got to the border with CAR, and this was around the time of the sort of the height of the Congo Civil War. So we had to fly over Congo, and then all the way down the east, and it was phenomenal. Sort of spent a year doing that. Did some work in South Africa on a game farm, but came back and scratched my head around what did I want to do. I'd always been relatively good with numbers, so ended up doing a CA, accountancy training, with a bent to natural resources. So I did it at one of the big four firms, and naturally just fell into the resources sector within that organization. Indeed, my first client actually was the Libyan National Oil Company. So I spent the first month of my training in a hotel in Tripoli, which was pretty interesting. And then through the course of that, realized that I really enjoyed that side of things, and ended up working on the IPO of Vedanta, which involved me living in a hotel in Mumbai and traveling around India for the best part of 6 months, that's really sort of really ignited my love of mining, to be honest. just understanding the breadth of commodities, the breadth of operations, and sort of every day is a school day, really, when you're looking at different mining projects. And that just sort of resonates with my sort of, I guess, inquisitive nature on things.
Did you enjoy Africa, James?
Loved it, and I still do. It's one of those places where I think it sort of gets into your blood a little bit.
Yeah.
And it's such a big continent with a vast array of, countries and cultures, and with reference to Emmerson and Morocco, that's a world away from another project I worked with in the Republic of Congo, the Zanaga iron ore project. I mean, the two couldn't be more different, but they're equally fascinating. So I've done a lot of work in my career in Africa, as well as in South America and other places. But it's one of those things that sort of ignited a bit of a passion, really. I finished my accounting training. Didn't really want to stay as an accountant. Great career, but not really for me. And I went to work at Vedanta. They just newly listed. I obviously knew the company inside out, so I went there as the sort of CFO's offsider. Stayed there for a while. Then moved into. I was an equity research analyst at JP Morgan. Covering sort of global mining companies and European listed stocks, which was interesting. And you put those sort of two together, and it gives you a pretty good grounding on understanding, what to look for in mining companies and what drives them. But what I really wanted to do was get a little bit more into the heartbeat of mining companies, and really sort of building them out and sort of growing them. And an opportunity came up to join Xstrata. And this was back at the time we were doing the transaction to buy Falconbridge. So back in 2006, I think it was, 5-6. Real sort of the heyday of the last super cycle. I was late 20s, knew a bit, but joined the group business development team there. Which, I think everyone probably knows the Xstrata story, but, a phenomenal journey of doing deals. And I joined working for two, very, very different, but very interesting characters running business development. And as I say, late 20s, I get to sit and work alongside, Mick Davis and Trevor Reed, and that small team at Xstrata, which, given a huge amount of responsibility across multiple aspects, whether that's, corporate finance, treasury, investor relations, and just a phenomenal place to learn and see huge experiences. We all know that Xstrata ultimately ended up getting bought by Glencore. I did a good, 6 or 7 years there, really sort of formed a lot of my sort of beliefs and understanding around how one looks at value, how you can create value in the mining space. And so, that had been a pretty busy period of time. So then I moved on, took a little bit of break, but then together with one of the co-heads of business development, helped set up a private equity group called Greenstone Resources, whose sort of strategy was to invest in post-exploration mining projects. We raised money from a lot of blue chip sort of US endowment funds. I started deploying that capital more in the junior space. I decided to leave there after a period of time. It was a little bit too far away from the sort of proverbial coalface for me. I quite enjoyed getting sort of really stuck in and helping really drive forward projects, unlocking and identifying the value. So I stepped away from there. And then, most recently, we set up a shell, Trident, which, we were, funnily enough, originally sort of Trident version 1 was a shell to acquire an operating asset or a project. But actually, it became apparent that, there were opportunities out there, but, there was nothing sort of crushingly obvious for us. And so, sort of sitting down and sort of thinking about how we use that vehicle, and started researching the royalty space, and it became more and more apparent that there was a huge opportunity there, and we can, sort of come on to that a little bit later. And so we switched tack on that and created Trident Royalties now. And then, most recently, I've joined the board of Emerson, and I've been fortunate enough to move up to chair of that at what's a really interesting time for that company as well. So I guess that's a sort of a potted history, but feel free to delve into any aspects of that, because there's a huge amount there.
There is a huge amount, yeah. So going back, was it 1999, going out to Africa there, and then obviously moving through to the IPO of Vedanta, and then your research analyst even research analyst at JP Morgan. So you've had the whole kind of from actual mining companies on the
I mean, it's quite interesting when you sort of take a step back, and we're always guilty of not taking a step back and sort of thinking about things. But I sort of cover the global diversified, sort of the mid tiers, the junior companies, as well as sort of that primary investing from a private equity perspective, and obviously the banking side of things too. So I'm quite fortunate in that I can sort of look at things from multiple ways and with multiple hats on.
And what do you think then about Africa as a place for exploration? I mean, you mentioned the last sort of super cycle, so you've obviously been through one, which I'd like to discuss as well at some point. But in terms of Africa as a continent, some people say it's the most underexplored place in the world, and some of the jurisdictions are nicer than others in terms of how the governments are. But what do you think about that as a place to do business and explore for stuff?
Wow, we could spend hours talking about that, to be honest with you. I mean, that's the beauty of Africa is that it's tens of countries, and everyone is different politically, fiscally, geologically, culturally. So sort of where do you want to start? I mean, everyone will. The mineral endowment of somewhere like the DRC is just, it's well known, it's phenomenal, but it can be a very difficult place to operate. And that could be because of infrastructure, or it can be because of the geopolitical risks that are there. But it is eminently doable to build a project there and unlock the value of those resources. I mean, just to take a good example in the market right now, Alphamin has done a phenomenal job. So, I mean, it is, in my opinion, the best tin resource on the planet. So, it should be developed, but it's in an inaccessible part of the DRC. They've done a great job of building that mine out. And now with, tin rising rapidly, it's people are starting to see that, but the drill results just keep on coming on that project. So, but it's been a slow burn. If that asset had been, if it had been in Morocco, even within Africa, it would have been developed probably ahead of that, and the value would have been seen sooner. But that is a great resource. So huge opportunity there. But then you can go to other parts which are easier to operate, and maybe they're not as geologically blessed. Okay. But I would agree with the characterization that it is somewhat overlooked and underexplored. And I think some of that goes back to, it is a risky place to do business. And so historically, money has not flowed there, or has flowed and then flowed away. And, I think sometimes investors can lump the whole of Africa together as one entity when that's not fair. So, you look at Tanzania, and Tanzania has had its problems with, the whole Barrick and Acacia situation. And I think, mining is long-term capital. And so when you get to a position where there are changes in the fiscal regime or relationships with the government, that can scare away that capital. And there's a sort of a halo effect around that means that, Tanzania has been off the agenda for a long time, but that sort of seeps out to the rest of Africa. And so particularly in the darker times in the industry, people look for a reason not to invest, and that can often, cause some problems for Africa. But, I really enjoy working there. I enjoy working in the different jurisdictions, and with my Emerson hat on, I mean, it is such a great place to operate for multiple reasons. I mean, it's got a very sophisticated mining sector, not least because, OCP, the world's largest phosphate producer, operates there. So very long on skills and understanding around how mining operates. It's very open for business, very straightforward. It's frequently ranked as the number one mining jurisdiction in Africa. So, there's a broad spectrum of considerations, but it is somewhere that offers opportunity, reward, but it's not without its risks. So one has to be quite considered and discerning.
Yeah, it's such a diverse place, and I get what you were saying about the bug as well, because I went to Botswana and also Zimbabwe and Zambia briefly, and even just those three countries are very, very different next to each other. Beautiful place to be. It's really, there's something about like the soul of it that's just it really does get you. And really itching to get back as soon as possible, really.
Yeah, I think we're all itching to get on planes, aren't we?
Yeah, itching to get on planes. Yeah.
Definitely. James, I wonder if I could pick your brains, because there was a phrase you mentioned quite a few times during that sort of potted history, and that was private equity. Now, we always hear people talking about private equity, but it'd be actually nice for you to, if you could break it down for our listeners, what is private equity and what kind of skills do you bring to the table? What have you learned from private equity over the years?
Yeah, I mean, it's interesting. Sometimes, look at a classic non-mining private equity. Is long-term money that's been raised from a group of investors, and they will give money to a private equity firm for sort of 10 years, and the private equity group and the investor will share in the profits that private equity group generates, and so they're backing a team to then go and invest that money. And often, as I say, in a non-mining sector, that will involve buying a business and using a huge amount of leverage. That model doesn't really work in many regards for the mining space. So private equity in the mining space typically is, the same model. You're taking sort of 10-year money, and then you are either buying entire assets and taking them private, or in the model of a sort of an Appian or a Greenstone, you're buying significant stakes to progress projects, bring them into production, take them up that development curve, get them re-rated, create a lot of money for shareholders, both the private equity shareholders, but also the other shareholders within that organization, within that company. And then they exit, and then they will often recycle that money elsewhere. So it's, what's good about it is it aligns your investment horizon. I mean, I touched on earlier, mining is a long-term capital intensive business. So, there is always a slight misalignment in my view between, public markets money and mining companies, because as a general comment, investors in the stock market can be quite short-term vis-a-vis investing in mining projects. Mining projects, as we well know, take a resource through to production can take 10 years plus. Yeah. And how many investors in mining companies really have a multi-year investment horizon? I'd argue not that many. So the private equity model does align much better to the lengths of the cycle that we can get. You can get very long periods of down pricing. What does it bring other than just that long-term capital? I mean, typically it brings quite a degree of sophistication in technical skills. Most private equity groups have very competent in-house technical teams. It brings a lot of network contacts and sophistication to the financing and sources of capital for building, what are often, high capital projects. And sometimes it can help build out teams of people, because, I think, you said it up front, one of the most important things that defines the success of a junior company is the quality of the management team and the project team around it. And our industry is not, and for the 20 odd years I've been involved, has never been blessed with a deep pool of talent. It's certainly on a technical and my manager front. So, getting those high quality individuals can be quite hard, and private equity groups can often help through their own networks to source and attract those individuals.
Yeah. So it's a massive learning curve, obviously, going along the private equity route, but it's a great grounding, and obviously it gives you a huge amount of experience, which you've now obviously brought to the table with Emmerson and Trident. I wonder if we could just sort of leave your, obviously you brought us up to date now with your journey to these two companies. I wonder if we could just, with your Emerson hat on, for maybe listeners that have not heard of Emerson before, could you give us a sort of high-level overview of Emerson and the asset that they've got in Morocco?
Yeah, absolutely. So Emerson is a potash development company, very advanced. We're just in the throes of securing the financing to build that project. And I suppose just before I get into some of the project details, it's probably worth sort of just, why did I get involved with Emerson? When I look at projects that I want to get involved with personally, there are sort of several things that I look at, and the quality of the project from a technical and geological perspective is really important. So tick that box, and I'll come on to that in a second. The quality of the management team, and the work that's been done to date, and again, very much tick that box. And then the commodity that it's in, and potash is relatively misunderstood. It's probably not quite the right characterization, but I don't think it's well understood. And in my view, I think it's a very interesting commodity, and not well understood why actually the outlook for that commodity is pretty positive. So when I put all of that together, it forms a very attractive investment proposition, and one where, importantly, my background and skill set, I think I can really bring a huge amount of help as we step through the critical phase now, which is securing, an appropriate and holistic funding package for the project. So, to take it back to the project itself, the primary asset is a project called Khemisset. It's based in northern Morocco. As I said, it's a potash project. And for those that don't know, potash is one of the three sort of key ingredients in fertilizers, alongside nitrogen and phosphate. The potash market has some quite oligopolistic characteristics, in that sort of 7 or 8 players control about 90% of the supply. So, we all know oligopolies can have some quite attractive pricing stability fundamentals there as well. So the project itself, albeit it's not the highest grade resource in the world, it has a huge advantage in that it is located in a great jurisdiction, being Morocco, but more importantly, from a locational perspective, it's on Europe's doorstep. And so it has a huge freight advantage, both into the European market, the African market, and also across to the key Brazilian market. The potash industry typically has, a lot of the production comes out of Russia and Canada, and has long logistics chains in order to get it to market. So that's a real advantage of the project. A feasibility study was finished about a year ago, outlining some very robust economics. It'll go for nearly 20 years. It's got first quartile cash costs. Importantly, it's a low capex project. So again, the potash industry, oligopoly, but characterized by high barriers to entry. And that really manifests itself through high capital intensity. So you typically would be looking around, $2,500 to $3,000 a ton of installed capacity. We're looking to do just under 1 million tons a year, so 750,000 tons a year for $411 million. So really right down in the sort of the $500-600 per ton of installed capacity, which is closer to a brownfield type of capital intensity. And the reason for that is actually because we're very fortunate that we don't have aquifer issues. So often these potash operations are deep, have to deal with aquifers, and we don't have that issue. So that allows us a low capex startup. So we generate, based on the feasibility study, sort of an NPV of just over $1 billion, IRRs sort of in the mid 30s, and sort of, almost $250 million a year of EBITDA over the life of the mine. That's the average, short payback period. So a really robust, attractive set of financial metrics there. So that sort of ticked the box for me in terms of, is this a project that's going to be attractive to investors? Has it got a capital cost that is financeable and deliverable when I sort of look across it? And, again, that was another big tick. I sort of alluded to the fact that, one of the key things for me is management team, because it's great to have a feasibility study and a very deliverable project, but someone's got to build it. And so you need, and there's a real difference between someone who can advance a project through drilling and the study phase to someone who can actually build a project. And, delivering them is a different set of skills. And Emerson is very fortunate that in Graham Clark, our CEO, we have someone who has, metaphorically been there and done it, and not just, a little bit. I mean, he's got 25 years in the industry, ran, the UK's potash mine, was involved in taking Woodsmith mine up to a construction point. So, he's got track record of delivering and operating mines. So he knows what that's all about. And so, I spent time with Graham before coming on board and was just, wholly impressed by the work that's been done, his approach, the sustainable nature of what he's doing, the team that he has started to build and the team that he has in mind to build this, both in country and sort of any required expats that are needed, which is quite minimal actually. And so I sort of put all that together, and it's just, for me, it's a really interesting opportunity.
Sorry, it's just and potash. Most people know it's used in fertilizer. It's the stuff that's going to help feed the world. But there are different types, aren't there, as well? Is that right, James? And it's like SOP and polyhalite, different.
Yeah. That's entirely correct. So SOP is a sort of a value add product. Our feasibility, and polyhalite is what Woodsmith will produce. It's a sort of a new entrant to the market. What our feasibility study is predicated on producing MOP, which is the sort of the industry baseline standard. It's the one that most people consume.
Okay.
SOP we can produce. It's a value add circuit, and we've done some initial work on that, and we're completing a feasibility stage or level study on that, because we think the opportunity within that segment of the potash industry is quite attractive as well. It attracts a premium price. But, that's something that we may add in time, because there is obviously a capital hurdle to get over on that. So right now we're focused on the MOP side of things, but with a huge amount of optionality around adding an SAP circuit, either alongside MOP or in order to replace it. But I think, your point is well made. There are lots of elements there. But as with anything, you have to sort of make sure that the market's ready for additional SOP. Our view is it is, but we've got to complete our work. And ultimately our focus is bringing this into production. Sometimes people can study projects for too long. We've got a robust project which is financeable, interesting, a lot of financiers at the moment. So, it's better for us to bring it into production and then alter circuits in order to add a SAP if that's appropriate in the fullness of time.
And do you think then, you've given your reasons there for joining Emerson, and you said, and it's in Morocco, so very north of Africa. It's got fantastic shipping routes, but do you think it's been perhaps overlooked a little bit by investors or the market? I mean, I'm very familiar with Sirius Minerals, where Graham came from, being from Yorkshire. And there was an awful lot of sort of hype, well, not hype, but chatter and excitement around that project. But it doesn't seem to be so much with Emerson. But as I understand, what Emerson have is actually better than Sirius. So do you think it's been missed a little bit, maybe?
I think it's certainly been overlooked. It's one of the things that I really try, and when I sit down and think about investment opportunities, either companies I want to get involved with or when I'm making my own sort of investments, is is the market missing something here? Actually, to go back to Alphamin, that's a good example as well. But so yes, absolutely, I think the market is overlooking something, and I think that comes from probably a little bit of scar tissue from what happened with Sirius. But I think more importantly than that, I think it has actually been missed. It's not. It goes back to this sort of African piece, and sometimes people steer away for it for that reason. And I think also, I don't think the potash market is well understood. I don't think people sort of really understand the long-term structural strength of that market. And it's not, it's certainly not a sexy commodity. It probably should be better understood and loved than it is. And, just for those that don't sort of understand or know, demand grows pretty consistently at sort of 2 to 3% a year. And there's a very good reason for that, which is, the world is growing. population is growing, we need more food. As the population expands, there's less arable land available, certainly per capita. I mean, if you look over the last 40 years, the amount of arable land per head of population has gone down a third. And in fact, last year, for the first time, you saw an absolute decline in the amount of arable land available globally, which, when you contrast that with a rising population, there's a sort of a 60% increase in food required by 2050. So the fundamentals of food supply are going one direction. And so why is that important for potash and fertilizers? Well, you need to increase your yields, the productivity of your land. So that demand side for fertilizers broadly, but most importantly for us with the potash sort of hat on, is definitely there. And so, but why is that not really translated into high prices? Well, partly this oligopoly side of things, and partly there was through the last sort of super cycle, there was a bit of overinvestment. But the fundamentals are very much there, and you start to see it now. I mean, if you look at the agriculture market, you're seeing that you've got grain prices at all-time highs. You've got across the agriculture sort of sector, prices very high. And if you look at what's happened with potash, so MOP prices have risen from $250 a ton at the start of the year to $350 a ton today. And that's a pretty material re-rating. And actually that the current prices are in line with our feasibility study. So it is, in my opinion, it's an overlooked sector. And if I compare our market cap to the NAV of our project, or the NPV of our project, it's abundantly clear to me that Emmerson is overlooked and undervalued.
Okay. Yeah, no, it's been good to talk to you, James, to get that insight then into your past. But I do want to finish off with something, and it's because you mentioned it earlier, and that was the last super cycle. I'm not old enough to remember super cycles in the mining and exploration space, but I certainly would like another one to come along. And it's something that we're also seeing and hearing about, people talking about it. So I guess it's a double question. What was the last super cycle like? And do you see one having started, or to come very soon right now?
Okay. Wow. Okay. We've got another 40 minutes then, have we? Okay. What was the last super cycle like? Well, I suppose there's for me, there's two parts to that answer, because there's the sort of the personal piece, and then there's the sort of the industry piece. And, I was fortunate that, I got to spend a lot of that, that last super cycle in the sort of the deal machine growth vehicle of the mining industry, but certainly of the non-precious mining industry, being Xstrata. And we were, I was working with some of the biggest characters in the industry, internally and externally. And from someone who was young, it was an amazing place to be. Very dynamic, really sort of sets your value side of things. And as I say, for me, helped build me out as to how I look at value. And it doesn't always have to be tier one assets, etc. It just depends what you pay for them. So from that side, it was great. And I think the industry is always easier when prices are high. It makes decisions that much easier. For the industry perspective, I think it was a great time in some regards, but ultimately it ended with the financial crisis, sort of accelerating the end of it. And it ended in a pretty dark times for the industry, with, most commodities oversupplied, a lot of struggling assets, a lot of cost cutting, redundancies, asset shutting, and that's never nice to see. But I think, we should always try and learn from that. And I think the industry I don't think will ever really fully learn, but I think you saw a cycle of big capital projects in certainly towards the end of the last super cycle, and we were as responsible for that at Xstrata as anybody else. But I sense this time there is a lot more reticence from some of the bigger players to invest that heavily in really building out the greenfield. I think towards the end of the last super cycle, everyone sort of got a bit caught up in that China's going to grow at 8% forever and a day. And so therefore, your demand charts just look like they're going on forever. And I think some poor decisions were made across the board and across most commodities, which has led to an oversupply in a lot of commodities for a while, including potash. So I think it was wild at times, definitely. And, it was a period of extraordinary deals, projects, price action. And then obviously we moved into the financial crisis and everything that's sort of flown from there, whether it's Brexit or, pandemic. I mean, what's been pretty crazy since then. But then moving on to your second question, which is, do I think we're in one now? And how do I look at that? Would I call it a super cycle? I think we're in a very interesting time in the commodities sector. And I suppose if I was to be, in the absence of thinking of something better, I do think there is a super cycle, but it's not that sort of China-led super cycle that lifts pretty much every commodity. It is one that I think there are various reasons for it, and I think the electrification of industry and vehicles and society is definitely a large element to it. I think the global fiscal response to the pandemic, stimulus, governments taking an opportunity to invest in infrastructure that tries to redistribute wealth a bit. And by that, I mean building out infrastructure projects that, I'm taking the UK as an example, the sort of the levelling up agenda that the Conservative government has. I think you see that playing out across the world as well. And I think that has some profound implications for infrastructure spending. So I think when I sit down and think about, okay, well, what does that mean for specific commodities? I think copper is, and this is a complete consensus call, but copper has just got such great fundamentals. It had great fundamentals before the sort of the EV revolution, but now it's even better. I mean, I think Goldman Sachs the other day, said it, called it the new oil. And when you look at the extra 5-6 million tons a year of copper that's going to be needed just to service the electrification of vehicles and other elements of society, I mean, that is a massive amount of copper annually that is required at a time when grades of copper ore bodies are still declining. So there's a real question, where do we find that? And I suspect you will see, and we are already starting to see, stronger copper prices as we're sort of wearing a little bit of the underinvestment as a hangover from the last super cycle. So the industry will find a way, because there's enough copper in the world. It's just what is the incentive price to bring it on? So copper, very interesting. I think everything else that flows around the EV sector, very, very interesting. Clearly we believe that. Look at the lithium deal for Trident recently as an example. But I think the key thing here is you have to be quite discerning. And you have to be quite careful. I think most commodities should do well, but there are certain commodities which don't play into that thematic quite as strongly. And so, you just have to really sit down and think about, okay, what are the demand supply fundamentals here? And these are typically demand driven cycles. Yes, a lack of supply can lead to a squeeze, and that squeeze can trigger some high pricing, but typically that pricing is ameliorated because additional supply comes on, and the industry can sort of address that and will address that when it's incentivized. So if you want sustained longer and stronger prices, it is a demand push rather than a supply crunch.
Okay. Well, that was good. I like that answer. Yeah. So look out for copper and EV related metals, commodities, and maybe then as well in the precious metals as well, due to the global debt and fiscal policies of governments around the world.
Precious is I always find precious hard. I mean, silver's got an industrial use, but gold doesn't. But you can't argue with. I mean, I find it difficult to argue with 2,000 years of history. on that. But, gold, I mean, with the Trident hat on again, we definitely want gold exposure. I think if you're trying to build that broad, whether it's in the Trident space or if, people are investing for their own portfolio, you need to have that broad portfolio. And so having the right gold exposure is important. It's, again, with the Trident hat on it, it's very competitive given the North American space. But, gold's still very interesting. And I think, you just touched on it there. We do live in extraordinary fiscal times as well. So you could definitely see a synchronized upswing in gold and precious prices together with industrials, which would be quite unusual, but it's definitely possible.
Great. Well, thank you very much, James. Thank you very much.
Thank you for your time.
No, thank you. No, it's been good talking to you. So I think that's a good time to finish. Unless, Kenny, you have any final thoughts or comments?
No, that was great. I was quite enjoyed that last 5-10 minutes segment there. I was just sitting back and listening. Yeah, very, very informed. Yeah, liked it. Good.
Right.
Well, yes, thank you very much, James. And maybe we can catch up again in the not too distant future. But yeah, thank you very, very much for your time. And take care.
Great. Thank you very much, gents.
Cheers.
Thank you for listening to another podcast from Market Musings with Fairbairn and Russell. Tune in next time.